Most people believe the safest place for their money is a traditional savings account, but this safe strategy is actually a guaranteed way to lose purchasing power over time. While you might see your balance grow by a few cents each month, the silent force of inflation is driving up the cost of groceries, rent, and fuel at a much faster rate. This means your stagnant cash buys less every single year. To stop this wealth erosion, you have to transition from a saver mindset to an investor mindset. Understand that cash is a tool for liquidity, not a vehicle for growth. By utilizing a financial waterfall strategy, starting with a small emergency fund, capturing employer-matched retirement contributions, and then funneling excess capital into low-cost index funds, outpacing inflation becomes a mathematical reality rather than a gamble. The real risk isn't the daily volatility of the stock market. The real risk is reaching retirement age and realizing your safe savings have been hollowed out by decades of rising prices. If you want to build true generational wealth, you must stop being a collector of currency and start being an owner of assets that grow while you sleep. Every day you wait to invest is a day you miss out on the power of compounding, which works best when given the luxury of time rather than the pressure of timing. Remember, the goal isn't just to work for money, but to eventually reach a point where your money is working harder for you than you ever could for it. Don't let your financial future be an afterthought. Take control today by moving your capital from the sidelines and into the game.